December of last year, since we're about to move into December here. So yeah, I think that's going to be something good. Let's go to data center. Everything is good to go. GJ, pound yen. Okay, so 2020, December 6th. Hey bro, is this being recorded? Yes, this is being recorded. Yes, that's correct. Can you focus on small losses as well? Yes, absolutely. We're going to focus on small losses as well. We have some background noise here. Oh, probably my mouse. Okay, spreads are going to be real spreads. Pound yen. Last, we need to see 200 days over here. So perfect. 6th December 2020. New York close. Awesome. We're going to go towards charts. Bring up the weekly. Bring up the daily. 4 hour. 1 hour for entries and the 30-minute also for entries. May want to look at the 15-minute, just may want to look at the 15-minute, but we're not going to put too much weight on the 15-minute, to be honest. Oh, looks like there's a big old gap over here on pound yen. Okay, so this is the weekly, basically previous weekly kind of closed bullish. That's all what we're looking at here. Let's take a look on the daily time frame. Daily, now here's what we can see, that the daily kind of closed bullish, but the next one opened right down over here at the bottom. 4 hour candle, also big gap over here since we're moving down. 1 hour candle, also big gap here. But since, like, you know, in this simulation, we're not going to be trading Asian session. So these gaps basically don't matter at this point. So we're going to move on towards our pre-New York, and then we're going to continue on from there. So 1 hour, and then we're gonna, this is 6 p.m. This is London Open. London Open, you can see there's a lot of volume now in London Open, and we didn't really come up to fill that gap either. We just did a little bit of a retest here. This is 3 a.m. for, oh wow, 5, 6, 6 a.m. 6 a.m. Eastern at this point. Damn, that was a big move over there. Okay, so now this is the time when you're coming on the charts around 6 a.m. Eastern, pre-New York. You can see that we've already moved down. So this is when you're looking at the charts. You're like, okay, well, what happened in the London session? So we look on the daily time frame. We can see there was a big move down in the daily. Now, just doing some simple analysis, what we can understand is, okay, let me just bring this up over here. Toolbars, line studies, and we need time frames. Oh, no. Toolbar and charts. Okay, perfect. So the first thing we can identify on the daily time frame is that there's a support right down at 137.530, right? Looking at the daily, we can also see there was another support right over here, which we broke on the daily, and now we're moving down at this point. Now, since we're moving down at this point on the daily, what we got to do is we got to take a look on the 4 hour time frame and the 1 hour time frame to see that if we can get some sort of like, you know, price moving from that point. So let's take a look on the 4 hour time frame. Now, looking at the 4 hour, it's very apparent that there was a bunch of, like, you know, rejections here to the left hand side. We had another rejection here, 138.500. So this 4 hour candle just went down, and we basically broke below the support. So now the question is, if we broke below the support, will there going to be some sort of a retracement for price to retest this low? Because what happened at this point is that we made a low over here. What's this? Is there a way to know which terminal time converts specific time? No terminal converts the time. You have to figure that out. This is it, what it is, you know, the terminals right here. You can see the time here, 1300 hours. This is 6 a.m. Eastern. I think it runs off of the London. Yeah, I think so. Not sure. But anyway, 4 hour move down, we made a low, so now the idea is going to be whether we're going to, like, you know, retest this low here or not by retracing. Let's take a look on the 1 hour time frame. 1 hour is creating a support down over here. But maybe if this candle can move down now, if we measure this range, this is like around 22 pips at this point. Let's take a look on the 30-minute time frame. 30-minute is also creating a resistance right here. We have, let's zoom in here a little bit. Let's do some scale fix. Scale fix. All right, perfect. So now this is a picture perfect setup, right? We had candle move down, weak bearish candle after this big move down. We had a strong bullish candle move up. Now, since we had a strong bullish candle move up, now we have a small bearish candle, then we have a bigger bearish candle in the 30-minute time frame. So this means that if this next new candle respects to have the previous one, which is where the stop is going to be around, 15, 16 pips, the range is almost like 28 to 29 pips. I think this could be a very, very easy trade for price to continue going bearish. So this is what we're going to do. We're going to wait for price to maybe wick up. Once it starts to wick up, I'm going to take a sell. Stops are going to be above the candle, and then we can continue on moving down. Yeah, I think so. Let's take a look on the 15-minute time frame. 15-minute, what we can see on the 15-minute is that, okay, we're still respecting this area as resistance. So now, since the 15-minute is consolidating right here, this goes to show that there's a lot of confusion on the 15-minute, right? It's not very clear on where price is almost moving at this point, right? Because you can see how there was consolidation, this 15-minute candle started to close above, but still close below this minor resistance at this point. So I would say this is still going to be a very good opportunity for price to continue down. We're going to wait for price to maybe make a top pick, probably not. So let's go to risk percentage. We're going to risk about 2% per trade. Visual mode, execute a sell, stops above the previous candle, anticipating price to continue down. So yeah, picture perfect trade over here. Shouldn't be any issues. So yeah. Maybe speed it up here a little bit. We're about 5 pips, 6 pips in profit. Since we're taking this trade on the 30-minute time frame, we have to wait for the 30-minute time frame to close. That's it. There's no ifs and buts about it. We just need to break below these lows, and then we can continue on moving down. Now we can see the 15-minute candle. Wait for break of low is not good choice, else stop loss is too big. That's correct. In this situation, how we manage risk, you wait for the candle to close. Now the 15-minute candle is about to close. 15-minute candle has closed. Let's take a look at this. We close bearish, right? We close bearish below all these candles here to the left hand side. So, we took this trade on the 30-minute time frame. It's still good to go, I think, to continue bearish here because, the trade basically closed. The candles close bearish. And yeah, I think right here we could probably secure some positions, close partials, maybe like 90%. And yeah, let the rest run. Stops at break even. Pretty simple trade. If we continue down till 137,990, that's a bonus. But if we don't, then, it is what it is. So now the 30-minute candle has closed bearish. And for this one to continue down, this candle has to respect to have the previous 30-minute candle. Of course, the stops are at break even. They should be above this candle, but hey, you know what? We're trying to not take a loss over here. So even if we get stopped out at break even, we're still going to be almost up 2% for this trade. The 1 hour candle is also about to close. All right, what's this question? I understand, but let's say it's 30-minute candle wick up first, hit stop loss. We're not going to talk about situations that did not happen. We're only going to talk about what's happening because with those questions, there can be a million different scenarios that can happen, right? What if it wick up? What if it wick down? What if 15-minute candle closed like this? So we try not to overthink, and we can only talk about the things that are happening at this point, right? If a 15-minute candle closed bullish, then we would have managed risk, right? But it didn't. So we're only gonna focus on what's happening at this moment. That's it. It's very, very important for you as a trader to really focus on things that are happening at this point. Okay, so the trade got stopped out. We got about 1.8%. We're trying to, this candle still open now on the 30 minutes. So I think what's important to note now to go over how this trade basically formulated, right? Very, very important. So the 4-hour candle went bearish, right? The 1-hour candle, it basically pulled up over here. The next 1-hour candle closed bearish. So the whole idea was that, okay, since we're in a downtrend and price has made a low over here, what's the probability that that low is going to be retested, right? There's a higher probability. But then again, once we measured this range, this was almost like a 22 pip range, and down to this wick, we had almost like a 400 pip range, right? So since we had 40 pip range, since we had a 20 to 40 pip range, the probability to get maybe like 15, 20 pips is way much higher, right? So that was the whole idea when this trade was executed for price to move down, got to about 17 pips, anticipated to continue on further down, but I guess it didn't. Right, so that's how we're basically going over the trade to see that, okay, this was actually a very, very good trade, small trade, anticipated to continue moving, but it didn't. So now, whenever we're talking about, sells, at the same time, we're also talking about buys, right? So let's say if price does close above 138, 400, then there's a higher probability for it to continue pushing up because we have clean range here to the left-hand side. Right, because we had clean candles come down. So now if we do continue pushing up, then we could have clean candles moving back up here as well. Right, so we're going to try to see if we can get that little bit of a move up. Yeah, we'll try to see if we can get that move up. Otherwise, it is what it is. So we got to wait for this 30-minute candle to close. Even though now this candle is breaking above these highs over here, sometimes guys are going to say, okay, this is a good opportunity to take a buy, but you have to understand, even though we're breaking above the highs, there's still this rejection area right here, because if this candle is moving in the zone, it could very well pull back from the zone to come down here as well. So we got to be very careful about that. So yeah, let's see what happens over here with this candle closing in about 2 simulation minutes. We're closing in 2 simulation minutes. Oh, we're closing back inside over here. So this 1-hour candle is also going to close. We have the same resistance on the 1-hour time frame. New York Open is going to happen in about 15 minutes. All right, let's speed it up here a little bit. Let's forward it. Okay. So now this is a range now at this point, right? This is a 38 pip range where we have a support, we have a resistance, we have candles closing side by side at this point. So this now becomes a range. So you can see how the 1-hour candle closed. It closed like a minor bullish candle, basically nothing happening at this point. Now, at this point, right? At this point, so basically we've created a resistance right here. Now, if this 1-hour candle breaks above the high of the previous, this one right here, since this 1 hour, 30-minute basically closed above the previous 30-minute candles, there's a potentially high probability for it to continue pushing up since we also have clean candles here to the left-hand side. But we're not going to execute the trade right here because, it's a Monday. We've already taken one trade. We're up about, $94 and 1.88%. So we're going to stay calm over here. We're just going to paper trade this. The stop probably going to be below this 30-minute candle. It's pretty big stop, to be honest. But yeah, the idea is for it to continue moving up. I think the safer one is going to be if this 30-minute candle closes bullish and the next one can continue bullish. I think that's going to be much safer. But wow, moving pretty strong over here. Got 20 minutes left. Okay, let's forward this candle and oh, okay, look at that. We did move up, kind of wick down and then really did move up over here. Awesome, perfect. This is the start of a new 4-hour candle now. We're rejecting these areas, so I think there's a high probability for price to continue up and then move down later on. Now, when you're doing simulations, it's very easy to get stuck with the price action to see, like, where it's moving, how it's happening, right? Because if you look at the time, we've been here since 6:30 and it's almost now 9:30 a.m. Eastern at this point. So this is going to be a point where we move on to the next day. So we're going to forward the candles here. And oh wow, look at that. We're closing bullish. So I think there's a high probability this is going to continue moving up. Yes. We made resistance, came down, created support. Next candle, boom up. Okay, let's move on towards the next day over here. We fulfilled the entire range here to the left-hand side. This is London Open, 4 a.m., 5, 6 a.m. Now we are in 6 a.m. Eastern. So let's take a look on the daily time frame. Daily candle moved bearish and we rejected this area and basically formed a rejection. Next daily candle still open at this point. Now, when you're reading candles, did you accidentally forward the 1 hour? Yes, I did. Yep. I noticed that when I had two 30-minute candles formed because it would have taken a buy at that point. So yeah, it was a mistake. So when you're reading candles on daily time frame and you look at the time, this is 6 a.m. Eastern, look at the daily and just notice what happened in this daily candle, right? This daily candle started right here. It made a top wick, very, very small top wick. This means it didn't even really move up and it just moved down. And now it's kind of like retracing back up. So just by looking at this, we can visualize that, okay, maybe if it hasn't moved up, maybe it may move bullish for a little bit because during Asian session and London session it just basically moved down, so that maybe could happen. Now we're just saying this only looking at the daily time frame. We don't know what's happening on the 4-hour, 1 hour, none of that. So now we're going to take a look on the 4-hour and see what's going on. Looking at the 4-hour, we're basically creating a support right here. We also have a resistance forming at this point, right? If we can break this support, then I think there's a very good possibility for price to continue pushing down. This is going to be a very, very easy, simple trade. If we break above this resistance, then there's a high probability for price to not only to fill this wick, but also move up because we have clean candles to the left-hand side to continue on till, what's this price? 139,700, I would say. So perfect. Right, the first thing you got to do when you're looking at price action is to identify the most recent support, which is right here on the time frame you're looking at, and then to identify the most recent resistance, which is right here on the time frame you're looking at. So let's take a look on the 1 hour time frame. On the 1 hour, we have, wow, just massive, massive, massive consolidation right here on the 1 hour time frame. Just incredible, right? We have, so what this means is that since we have this consolidation, we've been consolidating for what? 1, 2, 3, 4, 5, 6, 7, 8, 9. Almost like 10 hours, right? 10 hours price has been consolidating. So there's a book called 10 Essentials of Trading. That book says the longer we consolidate, the harder we break, right? So let's take a look at news over here. Do we have any news? We have no news here, right? Awesome. So if we break down, there's a higher possibility we're going to continue down in this range. Very simple. If we break above this area, let's say 139, this is exactly at 139, then there's a higher possibility we can continue until 139, 340, 350, almost like 30 pips away. So that's all what we're going to wait for at this point. So we're going to copy these over to the 30-minute time frame. 30 minutes also consolidating, straight consolidation. Now we got to make a plan for whether it's going to be an impulse entry. Oh, that book is called 10 Essentials of Forex or 10 Essentials of Trading. I forget. Essentials of hiking. I think it's trading. 10 Essentials of Trading. Oh yeah, this one right here. 10 Essentials of Trading. Yeah, this is the book. This is the only book I have. 10 Essentials of Forex, Chapter 11. Yeah, Chapter 11. All right. Yeah, so if we're going to look for buys, I think it's going to be better to have a candle close bullish and then have the next one continue moving up. If we're going to look for sells, I think it's going to be much better if a candle can break below the low of the previous one to continue down, or if it closes below. We'll see. We'll see based on volume. Hey, for what is this book? This is a trading book. What else is it going to be? There's another one called 10 Essentials of Hiking. If you want to go on a hike, that's the book for hiking right there. It's a trading book, man. Come on. What else can it be? All right. All right. Let's just wait over here. Oh, in the first 6, 7, 5 minutes, we're trying to break down over here. Do we? Oh, the 15-minute candle has closed. 15-minute candle has closed with a rejection. 30-minute candle hasn't really broken the low over here. 1-hour candle has almost maybe broken the low. Let's go to getting pretty excited here. If we do break below the low, I think there's a higher possibility we can fill this wick. This wick is like 13, 14 pips away and then continue on down over here. Looking at the 4-hour, yeah, oh yes. Yes. Looking at the 4-hour, this does make sense now. Thank you. 4-hour wick fill, right? So because the previous 4-hour, okay, if we look at the stories on the 4-hour, we can take a look at this. Price moved up, bearish candle after making the low right here, right? So this is a resistance formed. Next 4-hour candle, it closed a doji, which means this was a like nothing basically happened at this point. The next 4-hour candle, it closed bearish. This 4-hour candle has only moved up and it hasn't moved back down. So just by looking at the 4-hour candle, I think if this 4-hour can break its own low at this area, I think that's going to be a much better opportunity for entries for price to continue on breaking down. And I think if it breaks its own low, that's also going to be the low. 1-hour is going to break below this area here as well. So now we're visualizing the 4-hour candle to continue down to fill this wick, but we got to take our entries around 138,800. 138,800. So once it comes back down again, so what we're going to do is we're going to put pending orders, something that I've been doing here recently. So this is like what, 50 pips away. Distance is sell stop. Right here, TP, we're gonna remove it. Stop loss, the stop loss, what we're gonna do is we will adjust it based off of the time frames once we do break below. Awesome, right? So we're moving it based off of the 4-hour candle, and then we're entering based on once the 1-hour candle breaks below this area here. It hasn't been activated yet. We got around some time left for this candle. 30-minute candle has closed bearish, strong bearish. Now the next 30-minute candle has to continue breaking down. And then, okay, price has been activated at this point. Let's take a look on the 30-minute time frame. 30-minute time frame. Stop loss is almost 13, 14 pips. Yeah, I think it's pretty good. Stop is pretty good. 14 pips, maybe 15 pips. The whole idea is that if we're breaking below this low, if the 4-hour candle is also breaking this low to potentially come down to fill this wick and then move beyond, we're not anticipating price to go back in the range and go all the way back up, right? That's why the stop is not above this candle, because we're not anticipating it to continue all the way back up. Why not wait for the close on the 30-minute because of the strong range? We already discussed that. We're taking this based on the 4-hour time frame. So now you can see the 4-hour candle is really fill this wick. We continue to move down over here. I guess so that's why we didn't wait for the 30-minute to break, because this was visualized on the 4-hour time frame and we're in pre-New York volume. So if the 4-hour candle is going to fill this wick, then the range is going to break to the downside. We broke below the low on the 1-hour time frame. 30-minute was ranging. This candle broke below this low here to fill the 4-hour wick. So that's why we didn't wait for the candle to close, because we've been consolidating for all this while, and we only have maybe like 1.5 hours left for the 4-hour candle to close. Maybe 2 hours. All right, close 90%, stops at break even, and just let this run. Yeah, this is very nice. Who was this? So the 1-hour candle has closed, 30-minute candle has closed. Awesome. So now we can just let this trade run. Continue on moving down over here. Whenever a break happens after break consolidation, there's usually no confirmation to take on trade. That's correct. So it's better to wait on a high time frame to break the low. Yes, that's correct. It's not always the case, but when the 4-hour time frame or the high time frame is formed in that way, then yeah, it makes sense. Because now if you look to the left hand side, this is the wick that we're anticipating for the 4-hour candle to fill. It's not going to fill the entire wick. It may fill, partial and kind of like do whatever it needs to do. I mean, if it does fill the entire wick, then awesome. But, that's the anticipation. It's not going to always do that. It may do that. But at the same time, if we measure this range, something we talked about in the last trade, it's a 50 pip range. So getting like maybe 20 pips out of it, 30 pips out of it, it's way easier. Oh, wow. We are coming down over here. So probably going to close this entire trade right here. This is the NY open at this point. Very nice. 4-hour candle. Oh, damn. Holy. Pound, yen, and Brexit and COVID 2020. So yeah, these things can also happen. There was no news over here. Yeah, daily candle also rejected that area. Oh my God, what's going on over here? Just straight rejected that area like it's nothing. Oh, daily candle is about to go bullish over here now since it only went bearish. Interesting. Wow, crazy move. That decision to close, yeah, because we were coming down to these wicks here. Oh wow, daily candle has gone bullish here. Incredible move here by the daily candle. Just massive reversal here, coming back in the game. Rejection, rejection. I guess if we break above this area here on the 4-hour, we can continue on moving up. Wow. All right, let's move on to the next day here. I think in the meanwhile, we're also going to see what's going to happen here now. Oh, damn, moved bearish. Oh, are we going to break up? No. Oh. Yeah, we're going to break up over here now on the 4-hour. This is the Asian session. Asian session has started. We're slowly moving into London session now. There's pre-London volume, London open, moved up. You can see the time right here. I'm looking at the time here for the most part. The time here, volume came in and price moved up, cleared this range over here. Okay, let's move on towards pre-New York. All right, there we go, 6 a.m. Eastern here. Daily candle has rejected the support. Now notice we've been following the daily candles as it's moving. We had a big rejection, big move down, rejection. Next daily candle left no bottom wick and basically broke above the high of the previous one and continued up. Now we're coming up to a very, very, very strong resistance over here. Let's take a look on the 4-hour. 4-hour has also basically moved bullish. It hasn't really had a retracement after breaking above 139, 170, 139, 200. So maybe a retracement is needed a little bit for price to come down and then move up, probably. Let's take a look on the 1-hour time frame. 1 hour has just went bullish, right? Now, two things can happen at this point, right? Since we have clean candles here to the left hand side, there's a bit of a rejection right here. Obviously, we can't take buys, and the reason why we can't take buys is because we have strong move here, strong candle here, strong candle right here. So we would need some sort of a pullback, maybe a support formed, and then price to move up, or if we can break support, then probably we can continue down to maybe correct this move up, so those are the things we got to wait for over here. So I think this is going to be a good exercise to kind of like, wait for price action to form in a way which we can identify. Let's take a look on the 30-minute time frame. Yeah, 30-minute candles, also some candles just moving up. Yeah. So we just need candles to kind of like, close in a way we can identify them, what's happening. One thing is to not be scared of missing the move, since we're also breaking above these highs to move up, because this can very well come down. Damn, way too much honey in this coffee. All right, got 10 minutes left over here, 10 simulation minutes. Just waiting. Just gotta wait. Okay, we also closed bullish here on the 1-hour time frame. 30-minute candles also bullish. We need some sort of a retracement. That's all what we need. And we're gonna wait till the cows come home for a retracement. Pre-market fuel, yes, there we go. Take a look at that. We're getting that retracement. If this candle can close bearish, look at that. We're coming into NY open at this point. And if we can close bearish, all right, mates, take a look at this now. We waited almost a 1.5 hour for this area to form right over here, right? So if we break above the high at this point, there's a very good possibility price is going to continue moving up in the 17 pip range, right? If we can break above the high of the previous bearish candle. Now, let's take a look on the 30-minute time frame to see if we're creating that move down and move up. Looking at the 30-minute, yeah, we got like this 30-minute candle doesn't seem too good. Let's take a look on the 15-minute here. 15-minute kind of looks okay. Since we're moving into New York open at this point, there's very, very high volume at this point. 4-hour candle is bullish. Daily candle is bullish, but at resistance. 1-hour candle closed with a rejection down here, but closed above this area. 30-minute candle closed like rejection down here. So here's what we can do. We're going to do dynamic entries, right? Dynamic risk. So what we're going to do is maybe put 1%, put stops below this 15-minute candle, which is what, 15 pips. Accept this and see. So since all time frames are bullish, we're taking this trade based off of the 15-minute time frame because we wanted this candle to form on the 30-minute, but it didn't. But there's still an opportunity for price to move up, right? So even if price comes back and hits our stop loss, we're going to lose 1%. We're not going to lose 2%. We're not going to lose 4%. But if this candle breaks above the high of the previous bearish candle, then we have clean candles on the left hand side, and then we can add a position to this trade. So we can add the rest of the 1%. right? So that's basically the idea here. For the 15-minute, this one, to respect the low of the previous 15-minute. If it does respect it, then there's a high probability it's going to continue pushing bullish. So yeah, so far it's coming down, but we need it to go up. 12 minutes left. Oh, 13 minutes. Oh, 15-minute candle closed bearish. 30-minute candle is still open. I'm not going to manage my trade. I'm not going to close partials because our plan is to use 2%, and we only have 1% open at this point, right? So we're going to leave the whole thing open. Now the 1 hour candle is moving up very nicely. We need to break above the half the previous bearish candle. Oh, we're coming up. Almost. There we go. We're breaking above the high at this point. Looking at the trade. Now let's take a look at where we can. So probably, okay, it makes sense here. We're breaking above the high. This is where we can add the 1% back, right? Now, when we're talking about the stop loss, obviously we can't have the stop loss below the 1 hour candle. Actually, we can, but we can't because it's 18 pips, right? What we're going to do is we're going to have it below the 15-minute, probably right over here, a little bit below the 15-minute. Remove the TP, focus on the 1 hour time frame. Perfect. All right. Oh, wow. Look at that move, right? Clean candles to the left-hand side. First one is 20 pips. Last one is 12 pips. Close partials on this one. 90%. Close it. And that's it. Let it run. Simple. Right? Broke it down. Dynamic entries. And it just... 4 hour candle also moved up. Coming up to this rejection area here. Oh, put stops at break even. Yeah, right there. 1 hour candle broke above the high, 30-minute candle moved up, 15-minute, took entries on the 15-minute, put stops on the 15-minute. Very, very nice trade. So, oh, got stopped out over here. Awesome. Awesome, awesome, awesome. So this is our resistance right here. Yeah, this is our resistance right here. Okay, let's move on to see how this candle is going to close. We closed bullish. We're at rejection. Oh, damn. Coming straight down. Yeah. Daily candles also. Way past my bedtime. All right, man. Take care. Take care. Good night. One thing I'll just keep in mind is that when you said that as a trader, we should respect ourselves to focus on trade that will have a big move, and it works so well. That's absolutely correct. Okay, so now since the time is ended for this day to trade, this 1 hour candle basically rejected this area. We're at a very heavy daily rejection. We're at a very heavy 4 hour kind of rejection there as well. 4 hour candle broke below the low here as well. 1 hour candle broke below all these lows over here. So a pivot trade could be based on, on the 30-minute looks pretty good. A pivot trade could be if the next 30-minute candle breaks the low of the previous one to continue down. I think a lot of guys have seen a big move like this, and then a weak candle form like this, and the next one just breaks down if it breaks the low. Like a lot of you guys have seen that. I've seen that too. So probably that's going to be a paper trade if we do break below the low. Yep, high profit from this. Yeah, that's correct. So actually, let's put like a 0.5% risk right there. Big candle high time frame most likely to continue. Yes. Let's put a pending order right here. It's going to be like 6 pips away. Sell stop. Right down over here. Stop is going to be based on wherever the candle is going to close. Wherever the candle is going to break. This is, yeah, I've seen this happen too, but see, nothing. This is moving up. If it breaks the low, it has a higher probability to continue down. Oh, if you've broken the low over here. Looking at the trades, put stops at break even. It's only 0.5%. Nothing major, all got stopped out. But yeah, that's the idea for it to continue on moving down. A little bit of a jumping up and down, but you know. Oh, very nice. Almost 12 pips over. I think we can correct this whole move. Oh, damn. Went right back up and then moved on later. Nice. Okay. We have no news. Okay. All right, let's move on to the next one. See here. 9, 10. London Open. This is London Open. 4, 5, 6. 6 a.m. Eastern at this point right here. Let's take a look on the 1 hour time frame. Let's take a look on the daily time frame. Okay. Now, this is very interesting. Now, what we got to identify is what is the bias looking at the daily time frame. Sometimes what people are going to do, they're like, oh yeah, you know, bias is bullish, we got a trend line, blah, 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 blah. That's all fine. Fine and dandy, right? But we're looking at the current daily candles and how they're forming, right? So if we look at this daily candle right here, this candle came up towards resistance and it rejected it, right? And once this candle closed, it didn't even have a lower wick, which means that there was so much strong bullish volume, it didn't even move down, it only moved up, right? This next daily candle, it moved bearish across Asian and London session. It broke below the low of the previous candle. So if we think that this daily candle is going to continue going bearish, I think it's a very good probability it's going to continue down to probably fill this wick. And if it has more balls and more volume, it can continue pushing down to fill this wick here as well. Right? So let's measure what kind of a range there is on that daily candle here. Oh, nice. 45 pips over here. Very, very nice range. All right, let's take a look on the 4 hour time frame. Okay, 4 hour is also bearish. We got to redo these zones over here now. We're going to remove all these zones and we're going to redo these zones based on the 4 hour. So 4 hour had support right here, which we broke. We're coming down here in the 4 hour time frame. We have a little bit of a, the only why wick is filled, because there's volume. Whenever there's volume, wicks are filled. That's it. Wicks are filled when there's momentum in the market. I have a very good webinar on that on YouTube. Okay, so the only problem is this on the 4 hour is a rejection area, right? We would need price to, let me bring this here, yeah. We would need price to break below this area to continue down. So now if we measure this range, this is like what, 15 pip range, and then below this area, our range is like what, maybe like 40, 42 pips. We really need this 4 hour candle to continue down. I think let's take a look on the 1 hour time frame. Okay, 1 hour time frame looks like we are pushing down. There was a strong bearish candle. We broke below the support. This candle here, it went up, rejected this area and moved back down. We had a small bearish candle forming. After the small bearish candle forming with the rejection, this is a very, very strong bearish candle, right? Now, when we have a strong bearish candle like this is an indication of, okay, there's volume for bearish moves still. So I think if we can break below the low right here, there's a high possibility for price to continue down. Let's remove this bottom zone over here. And if we're looking at price to continue down, I think filling this wick would be the first target and then continue on moving down. But we got to take a look on the 30-minute time frame here. The 30-minute has a support at this point. Zoom out here a little bit. I do think we have clean candles down till 138,672. This is like a 20 to 24 pip range. So, okay, perfect. So we're going to wait for price to break below this low, and then we're going to see if we can continue on taking sells for price to continue pushing bearish. Awesome. Let's play it a little bit. Let's take a look on the 15-minute time frame. 15-minute also has this support right here. The only problem is this rejection right here. We would need a lot of volume for price to break below this rejection. But initially, we need price to break below this low. 138.940, 138.930. A very delicate situation. Let's see if we have any news. We have no news. No news here. All right. Speed it up here a little bit to 57 ticks per second. Impulse entries once we break below that low. 15-minute candle has closed. 30-minute candle is closing below this area here. Looking at the 1 hour, we are breaking below these lows. Looking at the 4 hour, we are breaking below the wick of the previous 4-hour candle. Yeah, since it's risky, only going to go with 1% over here. We're going to go with 1%. Stops above this candle, 13, 14 pips away, and then TP we're looking at down there. The only reason I think it's a little risky is because of this rejection to the left-hand side. That's it. That's the only reason probably going to be okay with doing 1%. Oh, man. Yeah, that was a good idea to do 1% rather than full on 2%. This candle's going to close here soon. I think if we can, oh wow, look at that. This is the perfect opportunity to continue down at this point. Even though now this is where you have to really see that, okay, if you look on the daily time frame, imagine this daily price action was a 30-minute price action, right? Where would you think this daily candle is going to go? Regardless of what's happening on the 30-minute, 1 hour, whatever. Let's forget about that, right? Imagine this was a 30-minute. We would anticipate this daily candle to continue on moving down to fill this wick. 100%, right? We've seen that happen on small time frames, and the high time frames move exactly the same way, right? If this was the 30-minute, the peasant time frames like the 5-minute, 1-minute time frame, they don't really matter, right? So in this case, the peasant time frames are the 30-minute time frame, 1 hour time frame. Doesn't really matter. Let's take a look on the 4-hour time frame. 4 hours also moving down. We just need to break this low, and then we have this wick to fill. 1 hour is forming maybe like a whatever, but the 30-minute, we're getting that confirmation. This, I think, is a very good opportunity for price to continue down. We have the 30-minute candle closing strong bearish below the support. This rejection here is whatever based off of the daily time frame. So I think this is an indication to maybe enter another sell. Full 2% for price to continue on pushing down. That's it. If we get stopped out, we lose 2%. We're still going to be up 4% here for the week. But the only issue is that this 30-minute candle has to respect the high of the previous 30-minute candle, because this one respected the high of the one previous to it, right? Making lower highs and lower lows. So yeah. Once it breaks the low, I think we can add another position for price to continue bearish. Oh, see that? We're breaking the low over here. I think we can add another one here. Add another position and keep this one stops above this candle's high. Kind of like using our profits from this week to make more profits. Makes sense, right? Doesn't hurt to make more money. Okay. All right. Look at that move coming down. Let's take a look on the 1 hour time frame. We break below these lows. We have 4-hour time frame coming down, 30-minute time frame. We have this clean candle here to the left hand side. I think there's a very high possibility we can continue on pushing down the 30-minute time frame. It's maybe waking up and down. We got to wait for it to close here. Oh, wow, look at that. See, so now since we're coming down towards a potential rejection area, this is going to be the point to maybe secure some positions and then let the rest run. So we're going to close this one, close this one. This is the worst one. So maybe we're going to close 50% on this. Put stops at break even, and yeah, let it run. So if you look on the daily time frame, we can see that it's already almost coming down to fill the wick right here. And that's another thing if it starts rejecting, but the whole idea was for it to continue down to fill the wick here. All right, the candle has closed. We look at the trade. This is at like 30. Oh, damn, look at that. Came straight down towards this potential rejection area. 30-minute time frame. Maybe close another partial here, 50%. Awesome. If it continues breaking down, it continues to break down. But if it rejects it and goes up, then it rejects it, because ideally it is at a rejection area, to be honest. One hour candles came down here and it rejected here before. The daily candle, it did almost come down to fill the wick. So this was a very, very well thought out trade based on the 30-minute time frame, closing below, adding a position once we broke below the low, daily time frame visualization where we can expect it to move and all that. New York Open hasn't even started yet, so let's see how this is going to close. New York Open. Surprisingly, there's a lot of volume. I think most part there's volume here because of, the Brexit talks and coronavirus and all that. That's why we have volume at this time. But normally, I don't think this December is going to be just as volatile as what we can see right here. All right. Let's move on to the next one. Oh, we consolidated here. Okay. Fourth wave. Yeah, it's coming, man. Fourth wave is coming. We already had 2 vaccines. We're going to have booster shots, and then they're going to come out with pills. You have to take these pills. Anyway, 4 a.m., 5 a.m., 6 a.m. All right, 6 a.m. Eastern. This is Friday. Let's take a look at the news. We have no news here, obviously. Wow, daily candle did move down. Damn, all the way down over here on the daily time frame. Continue moving down, coming down to a very, very, very strong support. Weekly is also coming down over here. 4-hour candle is also bearish. Let's take a look to the left-hand side. We're coming down to a very strong support. Sometimes in the gulag, people take buys over here for price to move back up, but yeah, I don't know. I don't know about that at this point. Looking at the 1-hour time frame, 1 hour is also coming down. Let's take a look to the left-hand side. There is this support right here on the 1-hour time frame. So we'll have to be very, very careful about this support on a 1-hour time frame. We got to measure how far this is. Oh, actually, it's not that far at all. Let's copy this over. Let's take a look on the 30-minute time frame. 30-minute time frame is also coming down. I think the next 30-minute time frame can really, this candle move up, break the low, and then continue down. It's like 15 pips away. I think with volume, we can continue on pushing further down. Let's take a look on the 15-minute time frame. Yeah, 15-minute candle is also creating that, make a low, come up, retrace, create some sort of a minor resistance, and then continue on pushing bearish here. So yeah, let's see over here. The 1-hour time frame is bearish. I think this could be an opportunity for price to continue on going down. So what we're going to do is we're going to wait for the 30-minute time frame here to break below this low, and then probably going to take a sell. This is going to be another 2%. Yeah. It's going to be a great idea. Wait for it to make a top wick. It's making a top wick right now. Maybe slow it down here a little bit. Once it breaks below the low of the previous candle, the trend is down, daily is down, 4 hours down. Yeah, I think would be a very, very good idea to take a sell over. See, we're breaking the low here of the previous candle. That's a strong support, might go sideways. Yes, that's correct. But we're counting on the volume to continue pushing down to at least like, 15, 20 pips over here. Yeah, so stops are going to be probably up over here, 16, 17 pips. We're looking at price to continue on pushing bearish. Volume is down because think about it, right? Whenever I'm taking trades based on trend, where trend is moving, I'm always thinking about the times I've taken buys at very strong supports and price has just kept moving bearish. And I've been thinking, oh man, the market hates me. I mean, we're at support. We should reject the support. Why am I in a drawdown? Like, think about those times. Whenever you've done that and prices just, continue to move against you all the time. So, yeah, that's the only reason why I'm executing at this right here. Because we still have some room to move down. Everything is bearish at this point. See, 1 hour is also bearish at this point. We're up like what, 10 pips, 11 pips? I think we can continue pushing below this area if the 30-minute candle doesn't break its own high. So probably it's going to be a good idea to kind of manage risk by putting the stop loss above this current 30-minute time frame. And the reason why I'm doing that is because the 15-minute candle has just closed and I've moved my stop above the 15-minute time frame. And that's also moved the stop loss above the 30 minutes. So now if it does continue up, I don't lose 2%. I lose maybe, 1.2 or 1.3%. All right, 13 pips, 14 pips, very nice. Probably gonna secure some right here and then let the rest run. 80%. Yeah, this is the last trade for Friday here. The 30-minute candle is going to close. Once it closes, then we're going to put stops at break even. Actually, let's put them in break even right here. Oh, got stopped out. All right, let's see how this candle closes on the 30-minute time frame. Close bearish with a little bit of rejection. Oh, wow, look at that. Still going down. Still going further down. Oh, damn. And then rejection and continue on up. Okay, sideways. Excuse me, sorry. Do you always wait for the candle to close? Or even break even? Or take partials? Most times I wait for the candle to close. Most times when there's room to the left hand side for price to continue moving, I wait for the candles to close. Other than that, I just secure, like right here, I secured because it was at a very strong support, so I had to be safe, but it still continued to move on down around like 34, 36 pips at this point. I hope this was educational. I think we did a lot of good things over here. Visualized the high time frame, executed on the small time frames, added positions to trades and stuff like that. So take care, everybody. Thank you for taking the time out and join us here today. Awesome. Have a good weekend. We're probably going to see you Monday. Take care.